Hello everyone! Welcome back to Kimchi Investment, your go-to channel for insightful financial analysis and investment strategies. Today, we're diving deep into the current US stock market volatility and how it impacts major tech giants like Microsoft and Meta. Let's get started. The US stock market is currently experiencing significant volatility, causing widespread concern among investors. Recently, the S&P 500 experienced a 4.9% drop, while the Nasdaq saw a drastic correction of 8.8%, followed by a 22.7% rise, and then another rapid drop of 8.9%. This roller coaster ride is making investors uneasy. Comparing the current market scenario to the 2000 to 2002 financial crisis, we observe a similar pattern of fluctuations. The ISM Manufacturing Index recently reported at 46.8, below the expected 48.8, and the service PMI fell below 50. Unemployment claims rose to 249,000, higher than expected. These indicators fuel fears of a potential recession. Let's break down what these numbers mean. 1. ISM Manufacturing Index. This index measures the health of the manufacturing sector. A number below 50 typically indicates contraction, which can signal economic slowdown. The recent figure of 46.8 is a red flag for many economists. 2. Service PMI. Similarly, the Purchasing Managers Index for services falling below 50 suggests a slowdown in this crucial sector. Since services make up a large part of the US economy, this decline is particularly worrying. 3. Unemployment claims. Rising unemployment claims, which hit 249,000 recently, suggest that more people are losing jobs, adding to fears of an economic downturn. Amid these recession fears, investors are moving their funds to safer assets. For example, US 10-year Treasury bonds have become increasingly popular. These bonds are considered one of the safest investments, and their rising interest indicates a flight to safety. Similarly, gold, a traditional safe haven asset, has seen a price increase of 1.6%. This shift to secure investments highlights the growing uncertainty in the market. Despite these alarming signs, our analysis suggests that a recession is not imminent. Here's why. 1. Historical data on PMI. Even during periods of economic growth, the manufacturing PMI has dipped below 50. For instance, between 1995 and 1997, the PMI was often below this threshold, yet the economy continued to grow robustly. 2. High GDP growth rates. The US economy continues to show strong GDP growth, which is a positive indicator of overall economic health. This growth can help offset some of the negative signals from other indicators. 3. Advancements in AI. Innovations in artificial intelligence are driving productivity gains across various sectors. These advancements help mitigate the impact of rising unemployment by creating new job opportunities and improving efficiency. 4. Long-term interest rates. The drop in US long-term interest rates below 4% is a positive sign. Lower interest rates can stimulate economic activity by making borrowing cheaper for businesses and consumers. Now, let's turn our attention to two tech giants, Microsoft and Meta, to see how they are navigating these turbulent times. Microsoft's recent earnings report was mixed. While the company showed strong overall growth, cloud revenue from Azure grew slower than expected. Despite this, Microsoft is making significant investments in AI and cloud infrastructure, with substantial capital expenditures planned to meet future demand. This strategic focus positions Microsoft well for long-term growth, even amid current market volatility. Meta, on the other hand, reported strong Q2 earnings, with a 22% revenue growth and a 31.5% increase in earnings per share. The company's investments in AI are expected to drive future growth, with significant research and development and capital expenditures dedicated to developing AI-driven products and services. This focus on innovation ensures that Meta remains competitive and poised for growth despite economic uncertainties. To help you better understand the financial terms we've used today, EPS, earnings per share, This is a measure of a company's profitability. It indicates how much money a company makes for each share of its stock. A higher EPS generally means better profitability. CapEx, capital expenditures. These are funds used by a company to acquire or upgrade physical assets, such as property, industrial buildings, or equipment. High CapEx often indicates that a company is investing in its future growth. PMI, Purchasing Managers Index. This index measures the economic health of the manufacturing and service sectors. A PMI above 50 represents expansion, while a PMI below 50 indicates contraction. Despite the market's volatility and recession fears, the fundamentals, especially driven by AI advancements, suggest a stable economic outlook for the next 2 years. Keep an eye on Microsoft and Meta as they continue to innovate and grow. Stay informed and stay invested with Kimchi Investment. Don't forget to like, share, and subscribe for more financial insights. Thank you for watching.